What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is April 29th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And today we've got a good range of topics to discuss for crypto markets. We're not only going to be taking a look at Bitcoin predominantly and talking about really what is a make or break moment for Bitcoin and what I'm going to be watching in regards to price, but also a variety of research in regards to private blockchains, as well as some drama going on in India with a potential cryptocurrency ban. So we'll be talking about all that over the update. So let's go ahead and dive right into it. So taking a look over the last 7 days, 24 hours in cryptocurrency markets, we can see that most things are in the red right now. The only one that's up right now is IOTA off of recent partnership news. But really outside of that, most cryptocurrencies are down for the moment. So this is going on with Bitcoin, again, tethering right on its support line. Definitely not moving to the upside as quick as I would probably like, but we'll take a look at that in just a moment. The big thing, though, that is still in the bull's favor here is that we are holding at around $169 billion multiple times here on overall market capitalization, and that's good to see. You want to see the low that was tested here after the rally, the first actual substantial low where we saw a rebound, continue to hold here. This shows significance. This shows that, hey, this price action was justified, that the buying activity was organic, it was real. It was people coming onto the market and actually scooping up Bitcoin on spot market. And again, as I've talked about, it's probably due to the fact that there's excessive pressure on OTC markets where their buyers aren't getting their orders fulfilled because there's not enough sell side supply in that case. Now, looks like as we're chasing up here on market dominance, we're probably going to be testing up some of these highs. I think the next target here would obviously be 55%. Again, has completely blown out of the water, I think, any expectations we had for Bitcoin dominance, but that's been mostly due to the fact that XRP and other coins have been taking quite a brutal hit, not to mention as well the whole BSV and Bitcoin Cash kind of debacle as not too long ago. Really BSV in the sense of the delisting. So let's go ahead and focus in here on the 4 hour. I think this is really one of the more core time frames. And as you all know, I don't like to overcomplicate things because I can tell you all we really don't need to overcomplicate this. There's a pretty clear setup coming up here, and that is the fact that what's holding Bitcoin is this line of support. Okay, I'll zoom out just to show you where that'll lead over the next few days. You can see this is going into May and June when we would get up here having a support range of around 5,600. Now, do I think it's going to take that long to test up towards 6,000 if we actually end up taking on an uptrend and going higher? No, it's probably not going to take that long. It's probably going to be in the first or second week of May. But I do want to really emphasize here that notice how when we have this uptrend line here and the range of price we've had since back in April 2nd, that it tends to be that just barely maybe outside of this hourly candle here, and it really depends how you draw the uptrend line, that there hasn't been a substantial close of the 4 hour below this line. Okay, the 4 hour is actually a pretty significant time frame when you're talking about kind of swing trading or kind of short-term time frames. I use it a lot in forex markets, and it holds a lot of relevancy when you're using a compounding indicator, or an indicator injunction with it, and that is the McKinley dynamic. So when we take a look at the chart here, I'm really looking for one of two things to happen. If the price action here cannot get above the McKinley dynamic and hold on this line here. So these are going to act almost like a wedge in a sense. You're going to have the McKinley dynamic coming lower, and you're going to have the support line coming upward, right? It's going to coil the price action. If the 4 hour candle for Bitcoin in the next few candles can't get above the McKinley dynamic and have a nice green breakout above it, in that case, then I'm going to be quite bearish in this case, because the only other alternative in that case is that it's most likely going to break down below if we get a close in the 4 hour below the line of support in this case, and it keeps getting rejected by the McKinley dynamic, then I'm probably going to be very eager to step out on a lot of risky positions and take in some profits from this leap up back on April 2nd. And the reason for that is that I feel that if this is broken, it's not only going to move very fast, but you've got a very large range that we need to close down on, right? That's one thing I'm concerned on, and I really think that if we do break this line, if we don't end up testing up to 6,000 like I'd originally expected we would, it's not the end of the world, but at the same time, the next range you've got here, I mean, just really consider that this is no man's land. There's really no support range. You might have to look back at 2017, but really, in the relevant time frame, the major thing to go back to would be 4,200. right, and set that third higher low. Again, I would like to see that happen later down the road and possibly on this same uptrend line, but that's well off into the, like, the summer and stuff, guys. So we might get it sooner than expected. Just keeping open to both possibilities. Again, I know a lot of people, again, I really want to emphasize this, guys, because more than anything, I want to teach you what I know. As a good trader, you should always expect that it can move both ways and have trading strategies for when things are moving in what I call the twilight zone. It's just basically when things are pushing sideways, right? There is no trend here, right? We're in the same exact price range we came down into on April 25th when the Bitfinex and Tether news came out. We have not shifted in any direction, right? This might be a significant depletion in value in a short period of time, but we had that right over here. What's to say it can't do the exact same thing, charging to new relative highs in the short term? But also, who's to say that it can't break this line? And if it is going to break this line, then it won't be significant, right? So anyways, just wanted to make that point clear. That's my major philosophy right now. Really, I think over the next 24 hours, we're going to see something pretty significant. Now, we'll look through as well as some of the altcoins here. Ethereum I've gotten some requests to talk about Ethereum. I'll be fair, as much as I think Bitcoin could continue to climb here, as we've talked about, there's still a little bit of room for Bitcoin dominance to increase. As much as Bitcoin might hold, I think Ethereum has made it clear after breaking through what was serving as the line of resistance, possibly could have been support as we saw here, but we've closed below there. There was resistance here for about a day's worth of price action, and it looks like we're rolling back over. And again, look at it right here, the McKinley dynamic serving as resistance in the 4-hour. Really good time frame to use the McKinley dynamic on, in my opinion. And you can see it weighing it down over here, weighing it down over here, and then leading to continued sell-offs. I think this is going to go down to around the mid 130 range, around 135, set another low here. And really, I think it's going to be one of the last opportunities. There might be a fourth one up here, but really one of the last opportunities you're going to see altcoins set in, a relative low in that sense. But it's still getting higher every time in this case, building what I think is an ascending triangle. Now, with XRP, this is one thing that I want to talk about because, quite frankly, guys, I like to buy on discounts. And I don't like how XRP, I'm sorry, the McKinley dynamic actually is broken on this chart. I've actually been a little bit worried because depending on how you draw your uptrend line, XRP might have already broken through that. But no matter what, I'm definitely picking this up somewhere in the mid 20-cent range. I'll be sure to let you all know if I do that, but I like picking things up at discounts. And in this market, to get something like XRP, like momentum play, that's something like 20 cents. That's not a big deal for me. I think that's a good risk to reward profile. If I do an actual trade on it, I'll let you all know. But really, the momentum here for the longer term swing trade is going to be when you break past this line of parabolic resistance or decaying resistance in this case, right? I think we flattened out now. It's not that long of a range to really try to get it back above, but I'm not rushing into it just yet for any kind of substantial trade, just a short swing trade here because there's a good price range, between these two different levels around where we are now and back up to this kind of flattening resistance around the upper 30-cent range. It's a decent profit range. So anyways, that's it for price action, guys. We'll keep it quite short and go on to the news here. This is something that I want to have a little bit of rant and rave on. And it's from Moody's Research warning corporations that, lo and behold, private blockchains might not be a great idea after all. So you're going to hear a theme that I'm going to really push this video, guys. I'm not the first one to say it. A lot of people have talked about it before, how private blockchains, basically blockchains that are created by corporations themselves or operated and led, and where consensus is met between that corporation or a pair of corporations in a given industry, is very similar to what was known as the intranet. So before the internet became, really mainstream, there was a lot of discussion that, oh, don't worry, we're all going to have our own internet. So basically, you're going to dial into my internet if you need to access something, and it was this idea that we'd all have separate kind of communication networks instead of having this one global framework to communicate on, known as the internet, right? And because of that, we found out that the internet failed, right? There was a lot of failures in the internet. You can read all about it. It's a really interesting topic. But in regards to kind of using that as an analogy for private blockchains, lo and behold, we tend to find the same exact issues that we find with the internet, or some unique issues as well that come with cryptocurrencies and blockchains, especially when you're dealing with monetary value transactions. So let's go ahead and read some of these risks that they found. Let's see. Risks include counterparty concentration, basically when people who are supposed to be cooperating in a positive manner, between one another, actually, lo and behold, go against the rules or go against the principles that they're supposed to follow and actually work in their own self-interest. Who would have thought? It's kind of interesting. It's like blockchain was about building a system that wouldn't be an issue for, right? IT and operational risks. Well, in this case, it's basically, I would assume their point to this, again, you could dive a little bit deeper maybe to get some extra details, but my understanding of this would be that, well, if your own systems aren't secure enough, even if, for example, you're acting as a good actor, if someone can hack into your system or hack into whatever makes the decisions within your consensus of your private blockchain, then lo and behold, you've got a broken system, right? It's not like Bitcoin, which is highly distributed. It's made up of multiple miners across the world, and it's very difficult to shut down because when one goes off, one will probably come back online somewhere else in the world. Inappropriate blockchain governance and legal and regulatory issues. Well, I would not only assume, again, most blockchains, private blockchains, are trusting on, a few select actors to do the job. And I guess, there's things like POA, proof of authority in that case, and there are some safety measures you can put on top of that make it work a little bit better. But again, this is why, as much as we might hate proof of work or proof of stake, and a lot of these consensus mechanisms that have been used, and even though they have their flaws, and proof of work, it does take a lot of, power, and then for proof of stake as well, it isn't very good in the distribution of coins in that case. Either way, the governance model and a lot of these things is either missing or extremely flawed. And again, legal and regulatory issues. I know when I settle on the Bitcoin blockchain that my value has been exchanged. No regulator, whether they, in any sense, hold it as something valuable or not, right? If they, in the eyes of the law, in the case of Bitcoin, I don't need legal authorities. I just simply can send Bitcoin, and when it says it's confirmed, it's confirmed. Unlike in private blockchains where you and I might, for example, say, hey, we heard a different transaction, or hey, I didn't hear about that transaction. And, for example, maybe a party had sent, maybe, for example, I sent off value to someone, for example, and the other party's like, no, I didn't get that, because maybe they're upset about the price that I sent them at, or maybe they want a different market rate, right? Again, we could plot up all types of different things, but this goes to show that I think private companies are going to have to learn the hard way, who didn't learn from the internet back in the 90s. And it's going to be a wake-up call for a lot of these things. And it's going to actually set the standard for people to build out a blockchain that not only can scale, but that allows for multiple participants to use as a framework to do very key important transactions. I'll be honest, I don't think it's going to be on a blockchain. I think you're much more likely to get something that can scale much better. I know there's, for example, like Holochain, that does like an agent-centric approach. You've got all kinds of other things that could scale probably much better than a blockchain in that case. I think blockchains are good for monetary transactional value, right? So love to know what you guys think down below in the comments. I've rambled on about that enough. Let's go ahead and talk about India. Is a Bitcoin ban imminent? So this has been brewing up more and more. We're taking a look on Crypto Daily here, and they continue to talk about this kind of rumor that there's an interministerial, consultations to draft this bill. Multiple different wings of the Indian government, or at least in the financial sector, starting to band together, write up a draft to basically not only ban cryptocurrencies, but to also make a legal framework for legal or official cryptocurrencies, right? So again, I'm very interested to see how this would turn out, because I've seen just how much there's really 2 points I'll make here. I've seen just how much people have failed in the leadership of India to restrict people from doing what they want with their money. They have, as of recent, about a year ago, they just went through this huge sweeping action to basically revoke a bunch of paper currency in the economy, and basically swapped it out in that case with a lot of individuals. They've been slowly trying to make it a cashless economy. That's been a big objective of not only India, but so many economies across the world. And outside of that as well, And they've also worked extensively, to just have more data in this case on everyday life in this case to know where money's moving. And in some cases, obviously there's a lot of criminal activity in India. I can understand why they'd want that, but I can tell you, no matter if it's for the good or for better in this case, whether it is really that they want to monitor illegal activity, some of which might actually be activity the Indian government should probably stop, some of it probably a little over the top. I'll tell you this. You only need to look at price here to understand the real underlying message, and that is India is not controlling its currency very well. Not in its monetary policy, not through the Indian central bank, and then also they are not gaining the trust of their own citizens in this case. And you can tell that through the rate of its currency comparative to the dollar, right? It'd be another thing to look at this in Bitcoin back in December of 2017. But my point here is that over the long term, India's currency has been continuously devaluing. In fact, since back here in 2008, where it was around 39 to 40 rupees, we're very well close onto its way of potentially seeing this in 2020, 2021, basically being half of the rate to the dollar than what it was back in 2008, meaning that your purchasing power has diminished 50% since 2008 if we reach back up to those levels. Really, it would be at an 80 ratio in this case. So lo and behold, guys, I think this is India's a very reactionary response to something that may be competing with their currency in this case, with the distrust of people, for their currency and for their government. I know a lot of people personally from India that I've met along the way who are in the crypto space. And again, yeah, you're going to get a little bit of bias in that case, but I can tell you that they really don't trust the Indian government. And they're, even if it is just this kind of group of 5 or 10% of people, that's a huge population of India who has distrust for their government, who has an incentive to look for alternatives, to try new things. And an economy where people have phones, they have all the technology they need to start using crypto, and there's OTC desks and all kinds of things that can get around that system. We've seen it in Venezuela, we've seen it in so many economies, and I can tell you the government won't be able to keep up. It really just won't be able to. So again, very interesting question. What do you all think about it? I'd like to know what you all think. This is a very interesting topic. Do you think this will actually have any effect on crypto? Because quite frankly, they already banned, I think, a lot of the crypto exchanges. So I don't see this having a damper on price, but more than anything, in fact, actually more of a boost later on when people realize they probably can't stop cryptocurrencies from getting adopted. But again, I guess I've got a little bit of an opinion of my own on it, as you can probably tell, but I'd like to know what you all think down below, whether you agree with me or disagree with me. That being said, thank you all so much for watching. That's going to be it for the video today, but until the next one, I'll see you all in the next video. Stay tuned.